Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What's going on today? Well, we're getting the release of the Fed minutes today. They're going to be coming out in about an hour. Now, right now in the markets are actually having an update. The Dow's up about 200, Nasdaq's up about 100. But for the last 3 weeks, we've pretty much been in just a sideways pattern. The SPY has been glued to the 380 number, a little below, a little above. Right now we're a little above, but maybe the Fed pushes us back down. Now I am expecting for a short covering rally, a short squeeze if you will. There's too many people shorting this market right now. As a matter of fact, the put to call ratio has never been more extreme. There's 2.4 puts for every one call, and that's very extreme, meaning everybody's betting that the market's going to go down, and that's probably why we're going to get a short squeeze to go higher. Now, I do think this market's going to go a lot lower. This market is not played out to the downside. The bear market's not over. Now, how do I know that? Well, I know that because of the negative yield curve. Look at a 3-month treasury pays about, 4.4? I don't have the numbers in front of me, but about 4.4. But you go to the 30-year treasury or the 10-year, let's take the 10-year. 10 years about 3.9, meaning there's an inversion of the yield curve. The short-term yields are higher than the long-term yields. And this tells us that the bear market will continue. This tells us that we will move into a recession. This tells us that there's going to be more downside pressure. Now, can we get a short squeeze? Absolutely. Now, I'm not 100% positive we'll get that short squeeze. I'd say there's about a 70% chance that we will move higher before we move lower. Now, I play the SPY a lot, as many of you know, and I think that can push up to the 400 level, but it's going to come down. It's going to this next move, if it is higher, it's going to be rejected. It's going to fail. It's going to bring a lot of people into the marketplace, and then we're going to move lower. It's just how it's going to play out. So I think there's a 70% chance we get a bounce before we go lower. This is just my take on the market. All right, now the market, stock market, S&P down about 20% last year, right? Now, do you know that's the worst year since 2008? What happened in 2008? Oh yeah, the housing market collapsed. Well, let's talk a little bit about the housing market collapse, right? A lot of people don't think it's going to collapse. Anyways, I'm a real estate broker and I take some training classes. I listen to the gurus, what they're teaching the other real estate agents to say. Now, here's what one of them said, right? They said the only reason that the housing market is dropping is because interest rates are going up. Now, I don't believe that's completely true, but let's say it is true. Interest rates are going up is the reason the housing market's coming down. Now, they say that if you continue to wait, the rates are going to continue to go up. And I do agree with that. So they say if you continue to wait, your payment, now people buy with the mortgage and they have a payment to make, right? And they say that your payment is going to be going up. It's going to be going higher. Even though the houses may be coming down, your actual mortgage payment will be higher because the rate will be higher. So now agents, what they're telling us, real estate agents, is we need to become the voice of reason. Now, can you remember any time in the course of history where the real estate agent is the voice of reason? I cannot believe that that's what they want us to do, become the voice of reason. You see, they want us to tell people that you got to jump into the market now because you're going to have a lower payment to make than if you wait, because the mortgages will go higher and your payment will go higher even though the house prices will go down. Now, of course, they tell you that if the mortgage rates do actually go down, that the house prices will go back up. And at that point, you can refinance your home at a lower rate. So don't mind paying 7, 8, 9% mortgage rates. That's what they're teaching us realtors to tell our clients, to be the voice of reason for our clients. Now, I don't think this is all accurate. All right, so let's look at the 2008. Remember the stock market, the first time We dropped 20% last year. This is the biggest drop since 2008. So let's go back to 2008 and look at what happened. Well, in 2008 is where the Fed actually pivoted, where the Fed stopped raising rates and they started to lower rates. Now, what happened? What happened when they started to lower these rates? Well, mortgage rates came down, but so did the cost of the house. The prices of the houses came down for another 4 years. We didn't bottom out in the housing market to 2012. So yes, the Federal Reserve, they lowered rates in 2008 and they kept lowering them all the way to 2012, but the housing market just kept coming down. So this is a flawed thing that they're teaching real estate agents. They're teaching real estate agents that you can refinance later. Well, you're not going to be able to refinance later. Now, here's why. All right, let's say you put 20% down on your house, right? You buy a house now at $1 million. You put 20% down, you've got this 7% mortgage rate, maybe even 8%, right? So you go buy right now this $1 million house. But okay, now you get real happy because the mortgage rates went from 7% down to 5%, so you can refinance. Well, no. Let's say you put 20% down, I got an $800,000 mortgage. Well, yeah, the rates went from 7% down to 5%, but that $1 million house went from $1 million down to 900, down to 800, probably down to 700 by the time you get ready to refinance. Now, can you refinance a house that is underwater when you have negative equity? No, you can't refinance that. So what they're teaching you is wrong. Look, the Fed's going to pivot at some point. Now, maybe they do it at the end of this year. Maybe they don't pivot until 2024. But they're going to pivot because they broke something. They broke the housing market, and eventually they'll pivot because they can't handle all the pain that's going to come. It's going to be a year of pain. Look, this is the biggest bubble we've ever had in history. And I'm not just talking about the housing market. The bubble in the stock market is just as big. Now, stock market's down about 20% already, and the housing market's down about 10% already. But guess what? We still have the biggest bubble ever. This bubble hasn't popped yet. The air's still got to come out of it, right? This bubble's going to pop. There's never been a time in history where a bubble hasn't popped, and this is the greatest bubble of all time, and it will be the greatest pop of all time. Now, a lot of people will tell you I'm crazy. Look, I think the stock market eventually will be down 80% from its highs, not to return to new highs for another decade, maybe 2 decades to get back up to a new high. The housing market's the same way. Now, I'm only calling for a 50% crash. Now, of course, that's not a crash. It's technically, that's just a correction. Okay, I'm calling for a 50% correction, but that may be very conservative. Look at what happened in the last couple years. We went up 20% a year, 20%, 40%, 50% may not be a big enough drop to flush everything out. When you got these big bubbles, you got a lot of problems. Look, just in the stock market, you have what's known as malinvestment. Malinvestment means that there's bad investments out there. There's 20% of the companies in the S&P that should not be in business. They have a bad business model. They're called zombie companies. They don't bring in enough cash flow to even pay the interest on their debt. They're a zombie company. This has to be flushed out. That's what a bear market does. It flushes out all the bad investment. Now, the housing market's the same way. Look it's not companies that get flushed. Oh, actually it is, because companies are investing in the housing market. The housing market has been, it's been financialized. It's been a speculation market where people need to go and speculate, expecting to make 20% on their money in just 1 year. So all this institutional money floods into the market. Well, this has to be flushed out. The housing market has to go back to where it's not this sexy financial instrument anymore, right? It's got to be flushed out, and the flush is coming. Look at it. 50% may be conservative when the flush happens, and that flush is going to be painful. It's going to be painful for a lot of people. A lot of people are underwater. A lot of people are going to see all their equity disappear, all their net worth disappear. A lot of the baby boomers, they have 90% of their wealth in their house, and they're getting ready to retire, and they're really really nervous right now because it's dropping pretty quick, dropping at the fastest rate ever in the course of history. Houses are coming down, and you're not going to be able to stop this. Now, the Federal Reserve, they're probably going to try to stop it. How are they going to do that? Well, they're going to stop it with a pivot. They're going to stop it by printing more money. They're going to print trillions of dollars. They're going to send out the stimulus checks again. They're going to lower interest rates, but I don't think it's going to stop it this time. It's like pushing on a string. Now, here's the thing. All right. So, look, when this all flushes out, it's going to flush out. The stock market down 80%. Let's call the housing market off 50% from its highs, and it's going to be a decade or two before it returns to those numbers. But what I hope and what I pray happens from all this is that we do not let the Federal Reserve ever again financialize the housing market. This is their fault. They won't admit it, but it's their fault. It's their fault by financializing the housing market, by keeping interest rates at 0% for 12 years, by buying one out of every 3 mortgages for the last 5 years. They own $3 trillion in mortgages. They're the ones that made this go up so fast. They're the reason you can't afford to buy a home. Now, you young people should be up in arms about this because you're the ones that have to live in this world. Now, when it finally crashes, when it finally gets back to normal, and the house is just a house, it's just a place to live, it's not a financial instrument for the institutions to be gambling on. Look, I hope you will eliminate the Federal Reserve, but that probably is not going to happen, but at least prevent them from taking over the housing market. That's exactly what they did. They took over the housing market. Get them out of the mortgage business. Do not allow them to buy mortgage-backed securities. Just do not allow it. Make it a law that they cannot buy these things. That's what sent this bubble into a hyper bubble. And this hyper bubble is going to break. And when it does, everything's going to flush at the same time. It's going to be very painful for a lot of people. The prices of everything will be coming down at a rapid pace. Stock market, real estate market. Look, when it flushes out, though, you got to have some legislation to get rid of the Fed, or at least keep them out of the housing market so this does not happen again. They've hurt a lot of people, and they're going to hurt a lot more people when this crashes, and it's just the way it is. If you keep them out of it, this would never have happened. I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? Get out there, everybody. Enjoy the day, but hit that subscribe button. I want to talk to you some more. Bye-bye now.